Yesterday, we saw Bitcoin get rejected from its 50 simple moving average as indicated here on the chart. This has potentially now turned into another bearish play for BTC. In today's video, we will be taking a look at the technical analysis for Bitcoin, sharing my thoughts and opinions on where BTC is heading next. And so as I get into today's video, smash that like button. If you're new to the channel, subscribe, and let's jump right down into it. So as I said, right, we have seen rejection here on the 50 simple moving average, the yellow line coming through the chart. This is coming in at $65,844 at the point of recording. You can see that we did get rejected here. Now, this rejection can be argued as maybe negative or negative price action on the back of the SEC and Wells notice issued to Robinhood. We can kind of see how these two things kind of coincide together, right? But we also note that on the way to the upside, we were expecting rejection anyway. So I don't think it really would have mattered whether or not the SEC filed the Wells notice against Robinhood or not. We did just want to see here a rejection from our 50 simple moving average, as it is the resistance area that we've been monitoring for BTC. Now, we know that we're coming up to the overbought area as we approach the 50 SMA. So these things kind of coinciding together kind of gave us the idea that this is where to short the market from. Okay, we would have been looking to short here with the stop loss just above the 50 SMA, and the take profit is going to be down towards our 200 exponential moving average, which might be a bit of a shock to many people who are looking at the market thinking that actually we've got a lot more room to the upside to be had. And I know the market, or at least influencers, lots of different people in the space are claiming that Bitcoin has flipped back to bullish state of play, and we are looking for $80,000, $85,000, new all-time highs. I'm not 100% agreed with that. I think for the most part here, we need to see the 200 daily EMA actually getting tested out. And I did mark this out at 51,453 to 53,676. This is the area that I think we are likely to move on down towards, find support, and then rally on up from there. So there's a couple of areas, right? The first one being the 53 to 56, and then of course the 51 to 53. So we do know that these are the areas that we're really kind of targeting out. We have been rejected here 3 times on the 50 simple moving average now, and we did close lower than the 50 exponential moving average, the blue line coming through the chart as well, which has now since today been tested as resistance. So the 50 exponential coming in at $63,851 is now the area of resistance, right? So it does look more bearish than bullish on the daily time frame. That's not to say that we can't, push up a little bit more on the smaller time frames, but I'm not expecting us to breach higher than the 50 simple moving average, the yellow line at 65,845. Okay, so from these kind of ways of looking at the market, not looking overly the best. We also do have our downward trend line, right? We can draw this in with yesterday's wick in consideration to the previous wicks here, and you can see how we have this tested out from these positions as well. Basically, downward trend line, lower highs and lower lows. Okay, this is something that we've been talking about for BTC for quite some time. Nothing terribly too unusual in here, but this is, of course, going to be a bullish breakout, I believe, once we come down a little bit deeper. Once we hit that 200-day exponential or come down a little bit deeper towards it, this is where I think we then start to launch, because I do look at this market as a bit of a bull flag. We have the pole coming up, we have the decreasing coming down here with the price action, and this is kind of what you'd expect to see, lower highs and lower lows after a significant surge to the upside. I've said it before and I'll say it again in this video as well. The overlapping nature of the candlesticks tells me that we're not trending to the downside here. Instead, all we are doing is grabbing liquidity. We're extracting money, or the market is, market makers and exchanges, they're extracting money out of the market. They're extracting liquidity out of the market by bouncing between the two ranges, right? We have the higher range coming in at around that kind of 70K, and we have the lower ranges at around 60K, right? Just bouncing between the two. But we are obviously going down a little bit deeper here. as we head towards that 200-day exponential moving average. Okay, so knowing these things are actually lining up for a bigger break to the upside, it tells us that the bull market isn't over. This is really just the beginning of something much bigger, and it'll be a very explosive move to the upside, in my opinion. Okay, but so just got to be patient with it, accumulate dollar cost average. That's what I've been doing. It's what Chris has been doing. It's a lot of what a lot of the CC members down in our Discord have been doing. So if you haven't yet joined us in Discord, you're missing a trick. Check it out. The link is in the description below. Let's go ahead and throw on smart money concepts here. Again, you can see the same concepts of what I've just been talking about. You have minor change of characters, minor break of structures, and you've got some fair value gaps in here, right? And these fair value gaps are likely to get filled out, in my opinion, but there's no major changes, right? We aren't seeing any solid lines with change of characterizations. We're not seeing anything like that. So the market, from a smart money concepts point of view, still remains in a bullish state of play, although it's got a couple of minor changes on the smaller time frames. So I'm not terribly too concerned over what's going on from a smart money concepts point of view either. Now, we can, of course, acknowledge that this should be a WXYXZ pattern, I do believe. Let me just go ahead and do my sense checks and my due diligence here, because we did come down yet deeper than 1.236. So we're looking at this as a WXYX and Z, if I use the correct tool for the job, WXYX and Z like this. Okay, it can obviously have the idea that maybe it's going to be a diagonal, a leading diagonal, where we then see much, much deeper price action later. That would be one for the bears, but I don't think that's really the case. There's a lot of overlap going on here, whereas it is technically possible to see the idea of a diagonal. I don't think it actually follows the rules of Elliott-Wave theory, because you'd have to have hit 1.618 and we haven't. We've only just gone deeper than 1.236 on the fib scales of things. So I don't think that's really what's going on there, but it is interesting nonetheless. From our stochastic RSIs, you can see that it is up in the overbought area on our daily time frame. We are looking for that next move to the downside. Our weekly is already oversold, so that's not terribly too much of a problem. So I'm not too concerned over what's going on with that, but maybe we'll take a look at the technical analysis on the weekly in a moment. Here we can obviously see the divergence indicator as well, just lower and got rejected on the 50 level on the RSI. So again, momentum on the relative strength index remains bearish rather than bullish. The MACD in itself has turned positive here after seeing a little bit of a surge yesterday. We had the cross on the moving averages as well, but again, I think this is a bit of a fake out on the MACD. I don't think the MACD is really giving you a full picture. That's why I don't tend to use this indicator. It's very, very laggy in comparison to relative strength index, at least the stochastic relative strength index, anyway, from a momentum point of view. So all in all, our daily time frame, is it still looks like it has some room to the downside to go. Let's check the weekly. I know not a lot would have changed since the last time we looked at the weekly, because obviously it's a weekly time frame, right? Price action still remains above the 50 exponential, the blue line, 50 simple moving average, also the yellow line there, and the white line is the 200 weekly exponential moving average. Price action is actually stacked up quite nicely, with the price being above all three of those, and the smaller time frame is higher than the larger time frame, all indicating that actually things are still bullish on the weekly time frame. We have got an oversold stochastic, but we can be down here for a few more weeks, so then again, I'm not terribly too concerned around that. We are dipping down a little bit here into the range of previous support on the weekly RSI. So again, we might start to see another run to the upside soon. Momentum is not overbought, it's just below, and we could see that repeating itself again. From a MACD point of view here, we can see a negative cross, so we are expecting a little bit on the MACD side potentially to come down. But again, this is all laggy, so it's only showing you what's already happened. And so if I bring this up into context, all you're really seeing here is this negativity is what's already happened and what's already passed. So again, the MACD is probably not the best indicator to be using, in my opinion. Let's go ahead and take a look at smart money concepts, which remains in a nice bullish structure here for BTC. So that's not terribly too concerning. There's no major changes from the smart money concepts point of view in the most recent weeks either. Equilibrium is down here towards the 50 simple moving average and 50 exponential moving average. Not that I'm expecting us to move down towards $43,000 to $45,000, but if you were to see a wick come down there, it should find support very very easily in this range, as it is an area of previous consolidation and also the areas of the 50 EMA and 50 SMA. So for BTC on the weekly time frame, there isn't actually anything major wrong with it. It looks, it's like a healthy correction, some volatility for sure, some liquidity that is being grabbed out of the market. But for the most part, there isn't anything else really too concerning over BTC on that particular level, on that particular time frame. So yeah, I think for the most part, Bitcoin's seen some volatility. We have, of course, seen the SEC going after Robinhood. It has kind of spooked the market a little bit. And I don't think it's really this initial fallout that's the problem. The problem is really going to be new adoption. Lots of new users who would normally be going to Robinhood to kind of get into crypto for the first time are probably not going to do that, considering the SEC law action. So it's going to be one of those. Keep a close eye on that one, because it could be pretty disastrous for a bullish market for crypto. And I think it's probably why the SEC are targeting some of these players in the space. But guys, if you haven't done so already, why don't you check out this video right here, where we are discussing some of the other things that are going on in the crypto space.